is the founder and CEO of BlackRock, the world's largest money manager, I think it's fair to say. Larry, you see where money is flowing in and out of the world, probably more than anybody else. Where is it flowing in right now, and where is it flowing out?
Well, it's good to be here in the kingdom. Thank you, David. It's always wonderful to see the transformation of the kingdom. And again, coming back here again, we're seeing an enormous change. We just did a transaction here in the kingdom, and we had 5x more demand than we could provide. It was for pipeline in Jafurah, and the amount of money that was interested in investing here in the kingdom was at a record level from places all throughout the world. We had 5 times more demand for investing in this one project. To me, this is just an indication of the transformation here in the kingdom, but more importantly, in the whole region. And I do believe we're seeing more and more as the GCC becoming one of the major destinations for capital. This region has been typically underinvested by global investors worldwide. At the beginning of the year, we did see some modest transformation movement out of the dollar, and we saw that money moving into Europe and to other places. But that movement was from a huge overweight in dollar-based assets. And I would say in the last 2 months, we're seeing that money coming back into the United States. And so I don't see there's that much movement. There's still a deep belief in the opportunity in the U.S. You asked Cristiano about AI. If you look at the makeup of the second quarter of the U.S. economy, over 40% of the economic growth in the second quarter was CapEx for technology. And you don't see that in other places in the world. And it's that CapEx, whether it is through data centers or finding more power, gas, building gas turbines, you're seeing all that happening more in the United States than most places in the world today. You're not seeing that as much in Europe. And this is one of the big reasons for the huge gap between the U.S. GDP and the European GDP. But look, money's going to move around all the time, but I would say most global investors have a very large overweight in the U.S., and I think that's going to be the place to have your overweighting for at least the next 18 months. And we'll see how that all plays out then.
You talk to central bankers regularly. What are the biggest concerns today of central bankers about what's going on in the global economy?
I would say the biggest question from central banks is what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have, what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving, ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill-prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI and other things. It will be changing the technology around the plumbing of finance.
We're just about out of time, so I'd like to just ask any of you comment on this question. The United States government has roughly, I guess now, $38 trillion of debt. And we're adding about $2 trillion every year. Does that bother any of you that we have this much debt, or you think it's manageable because we've been managing it for the last 10 years or so? Anybody worried about the debt? You are?
Actually, I think we keep looking at the liability side of the balance sheet, and I think we also have to focus on the asset side of the balance sheet. And I think what the president is trying to do is massively increase the asset side of the balance sheet, including, among other things, I think the investment in Intel is up 2x, 2.5x since the president made the investment. Look, I think it's very difficult to outrun 37 trillion of liabilities when the demands. It's very easy for a government elected for a relatively short period of time to make commitments. I do think the way we're going to get there is by growing the asset side of the balance sheet. And if you think about the government owns 21% of every corporation in America, and it can adjust the tax rate anytime it wants. It owns 35% of every American's income, and it can make an adjustment in that number anytime. So there are a lot of assets on the balance sheet of the U.S. government that don't appear that are significant. So I'm not worried about our solvency, although I would like to see a slower growth rate in our liabilities.
Yes, Larry?
So if we continue to grow at 2% a year, the deficits to a percent of GDP is going to overwhelm us. But if we could unlock private capital, unlock everybody in the room, we could grow at 3%. I mean, it's not much change, but if we grow at 3%, debt to GDP will fall. But that being said, we still are a nation that needs 30 to 35% of all of our treasury sales goes overseas. And to me, that is the biggest issue today. We're lucky that people would like to invest in US dollars, invest in the US economy. If that ever changed, it has a multiplier effect because the dependency on selling dollar-based assets to foreigners. We are one of the most unusual nation in doing that and having that type of dependency. In most other countries that have high debt to GDP, they have huge domestic savings. So it does not have that difficulty. So it's something that we just need to be aware of, but we could get out of this very easy, as what Bill said. We need to grow out of it. We need to unlock private capital. It's not about raising taxes or lowering taxes. It's about unlocking private capital. There's trillions of dollars of money sitting in money market funds, sitting in bank accounts. If we get more and more people to move that money from a savings account to an investment account, we'll be fine.
Hey,
Yeah,
Jamie?
so it's not I would say it's not a crisis, but it's very important we deal with this issue. It's a global issue. You go around the world, deficits are too high, governments are spending money, a lot of that money is being spent for consumption, not for future growth. And I would just add, what really works is good policy. We need growth policies, deregulation is free. You travel around the world, and I was just in Argentina, and you look at the policies, what they've done in Saudi Arabia, with the markets, with PIF, with education, with schools. Good policy is free, and bad policy is devastating. So we should all focus on is education, healthcare, infrastructure, proper taxation, foreign investment, and it should be used to help all the citizens of the country. And we don't focus enough on that because bad policy sinks country after country after country.
The people who want to invest in the United States, should they be worried that the dollar is going down against, let's say, the European currency for the last about 11% or so since January? Or is that something that American people who invest in the United States should not be worried about? The dollar has declined in value. Is that a concern of any of you, that the dollar has gone down in value, or not really?
It's a short window, David. And there's been dollar supremacy for a long time. You've given a little bit back. But at the end of the day, it goes back to this growth point. Where's the technology innovation and where's the growth? Technology innovation is central to growth. The United States has a very strong hand in that. Where's capital formation, the best capital markets in the world? The United States has the best hand in that. So while in the short term, there are reasons that some of the dollar dominance has moved back, when you talk to capital allocators broadly, and Larry made this point before, the vast majority of capital allocation, 50%, is going to come to dollars and dollar-based assets, given the economic position we have.
So a final question for anybody. Should I be buying cryptocurrencies or should I avoid it? Anybody think this is a great investment opportunity, or
if you believe that countries are going to continue to debase their currency, if you believe that there's going to be global rise of insecurity, owning crypto assets or gold are assets of fear. You own these assets because you're frightened of the debasement of your assets. You're worried about your financial security. You're worried about your physical security, and between crypto assets and gold, they believe there's a strong belief that is a good hedge against optimism.
Okay. Jamie, you were a little skeptical of crypto at one point. You're still skeptical.
I've gotten away with no damage so far. Crypto is real. It can mean blockchain, stable coins. You have a JP Morgan deposit coin. You can move stuff. Smart contracts are real. All that stuff is real. It will be used by all of us to facilitate, better transactions and customer service.
If anybody wants a tour of your new building, what's the best way to get it? Call you directly?
Call me directly. Yeah.
Right. You're easy to get a hold of, right?
Yeah, you'll get in, David.
Okay. Thank you all very much. Appreciate it.
Thank you.
Thank you.